Hi, Nikki James here. Today I'm going to talk to you a little bit about income and what income is used to qualify when you're looking to buy a house and get qualified for a mortgage. So there's different types of income. If you're just straight salaried, that's really pretty easy. We just use your salary. Now, there are some distinctions with that in terms of how long you've been on a salary. So if you have been self-employed recently and gone to a salary recently, there are some rules around how long you have to be on a salary depending on the loan amount. So loans under $548,000 nationally, not as strict in terms of how long you have to be on a salary. Loans over that, what we call the jumbo or the non-conforming loans, often require 6 months on the salary. So that's just something to watch there. But we literally look at your salary, take it, divide it by 12, your monthly amount. We take that amount to offset the mortgage payment. We use a certain percentage, which I'll go through how we qualify in a different video. Another thing to note is watch job gaps. So oftentimes people will take time off, which is fine for different reasons. If you just take off and take a sabbatical and just, quit your job and start a new job, you have to watch, again, in the jumbo world, more important than in the conforming world. So that's the loans that are above $548,000. We want you back on your job for about 6 months if you have taken a break. Maternity leave is a little bit different. If you are on leave and you have disability, short-term and long-term, then we sort of consider you still employed because you're still getting paid. So that is a different, or paternity leave, that is calculated differently. But a true job gap where you just quit and say, I'm going to take some time off, we'd like to see you back for 6 months when you're looking in the jumbo world. Commission and bonus. Okay, so these are things that are variable. We don't know how much you're going to earn. So we look at history, say, well, what's likely? What is your likely variable income? So commission and bonus are the most common variable incomes. So we look back for the last 2 years and we say, what have you earned in the last 2 years? We take an average, 24-month average, and that's what we use today. Let's say we were at the end of the calendar year and you had received no bonus in 2021, but you'd received a bonus in 2019 and 2020. We would need a letter from your employer stating that perhaps the bonus is only paid in December. So if you've had no bonuses after the year gets a little bit into the calendar, we can start asking questions. In the first part of the year, we don't, because normally people don't get a bonus every month. It's often annually or 6 months. So we will look at when do you get paid the bonus. Commission is the same way in terms of us averaging it, but we would expect to see commission kind of coming in more regularly. If not monthly, we would want an explanation as to what type of job it is and that it's a long sales cycle or something like that. So that's the variable part there. If you move companies and we can prove that it's a similar company, similar role, similar job, we can, in some instances, look at the prior commission or bonus at your old company plus the new bonus at the new company. But you would have had to have at least received one at the new company. We can't go straight cold to let me use bonuses even though I haven't received one at my new company. Some loans in the jumbo world don't allow that. So they don't allow prior companies. So you have to wait until you've been on the company for 2 years. And that's more important for commissions because that really is obviously much more representative of how you're doing in your job. Okay, so after commissions, the next thing I want to just talk about, let me talk about there is if it's declining. So if we see 18, 19, 20, and then 21 goes down, we're going to ask why, and we're actually going to only use a 12-month average of the declining, the worst year. So just watch if it does start to go down. We don't do that full 24-month average. We just take the last 12-month average if it's declining. The next one, RSUs. So that is much more common these days with the high-tech firms especially. So RSU stands for Restricted Stock Unit. It's complicated. It's a fun calculation and it depends. There are different loans calculate them differently. So we have some loans, not as many, that just literally take what was your dollar amount in 1 year, what was your dollar amount in the next year, and we average it. Again, if it's declining, we would take the 12-month average, not the 24. But most RSU calculations are something like, we look at the history of your stock and how much you've had in the past. We look at what you have going forward for the next 3 years. So we look back we want a 2-year vested history, and we want 3 years going forward. So when we're talking about going back, that's from vesting. It's not from when you joined the company, it's when you actually vest. So sometimes it takes you a whole year before you vest. So it can be 3 years before we can actually count the RSU income. Then we take the average stock price for the last 2 years, plus the current, or the current stock price, the lower of the two, times by either the average number of shares that you've had in the last 2 years, or what you've got left going forward, whichever is lower. So it always whichever is lower. So the stock price times the number of shares is what we use for income. But in both of those, it's the lower of the stock price in the last 2 years, or the current stock price, or the number of shares that you've had in the last 2 years averaged, or the number of shares going forward. I told you it was complicated. So anyway, I think the moral of this story is talk to me if you have RSU income. We can help you understand how much of that we can use. Of course, RSU is money, so you can use it for your down payment. But in terms of having it count towards your income to offset the mortgage payment, that's what I'm talking about there, is how much of it can we use. So call us. We'll help you figure that out. And for all the other income, it was a little bit more simple. So happy to work through that with you if you'd like to give us a ring. Again, I'm Nikki James, and look forward to helping you.